I've been a student to the markets for the last 20 years now, and you never stop learning as a trader, and you should never stop learning as a trader because you're always trying to get better, make more profits, make more winning trades, managing your risk. But I want to talk to you about something I was taught 7 years ago by JP Morgan's technical analyst here in London. I spoke about this several weeks ago at the London Investors Show, and it seemed to have gone down very well as well. Got a lot of emails from people just talking about it and how well they're doing. You know, they've done several good trades since that show by using this technique. And I don't think it's for beginners. If you're somebody that's not put a trade on yet or set your charts up, do that first. Do those videos first, then come back to this. Because I think it's really going to help you and get you off to a really good start as a trader. Okay, so as I said, I would love to say this is a technique that I developed. When I get into it, you're going to go, oh yeah, of course, this does this does that. But it's what happens afterwards that is the key for this technique. Now, if you're somebody that can't sit and watch a YouTube video for more than 30 seconds or a minute, then probably this video isn't for you. But if you want to learn maybe this technique and give it a go, then sit tight, guys, because I'm going to go through it. And recently I made those 30 grand trades and 10 grand and 6 grand trades. They were done just over a couple of days. They weren't long swing trades. But with this technique, you can use it for day trading, swing trading, and I'm certainly using it for my investment and ISAs and SIPs and pension trades as well, guys, because it works so well. All right, let's dive into it. Let's sit tight. So yesterday, the Dow Jones made a 400-point drop yesterday, and we were shorting the markets. Okay, the DAX dropped. We were shorting the DAX. The S&P dropped. We were shorting the S&P. We were shorting individual stocks. We'll go through a couple of them. Now, I want to just start here from the basics, okay? Because page one of technical analysis is markets make higher highs and higher lows in an uptrend, okay? So the price increases, we make higher highs and higher lows. In a downtrend, it does the opposite. We make lower lows and lower highs. Okay, yeah, that's fine. That's page one. But it's the pullbacks that are the interesting part for me that I want to look at now, okay? I'm going to show you the trades taken yesterday were short trades, but I'm going to show you what I'm looking for here in a long trade so you understand it. At any time, price on a chart, forget the time frame, has an impulsive move that goes higher and aggressively pushes higher, the retracement or the reversion to the mean or the pullback, we used to call it pullback in the old days, drops deeper near from where it started. That's where the buy zone is. You need to be interested because the next move is the big move. And if you're a trader that can't grow your account, you want to be looking for the buy zones, guys. The buy zone often then puts you into a big profitable trade, 30 grand in a couple of days. All right. So if you can identify the buy zone and where that place could be, then you could ride the next wave higher. And same with a sell zone. A sell zone will come after a move down and a pullback higher. It's got to be a deep pullback. It's not a shallow pullback to here and then down. It's not a shallow pullback to here, then up. It has to drop lower because it has to encourage the traders that have missed the move. I got taught by JP Morgan's technical analyst in London 7 years ago, this technique, and it changed the amount of money I make on trades. I get into big profitable trades now. So as the price goes higher, okay, it's going to come probably from a downtrend, but you get that first initial then push higher. The people or the traders that missed the short side thinking it's going to go back down again, it doesn't clear the low. Now this is the buy zone, and from there it gets people on the wrong side of the market and it pushes in this direction. Okay, so yesterday the Dow Jones pushed up. It had a several days move down, and as soon as that happens, then I want to look at my fib retracements. Now you're going to say, oh yeah, we know what fib retracements are. But it's the sell zone that you got to watch for. It's the 61.8%, and what JP Morgan told me it's 76.4% is the fib where it often pulls deep back to. Now, if I just wait for it to get to 76.4%, I miss loads of trades. So with my trading with this over the last 7 years, I put in the 61.8 and the 76, and I highlight those fib retracements, and I make them much clearer for me and my students. All right, so when we get into there, we know there's a chance the price is going to go down, or it could even start a really big move to the downside. We've got double trend predictor, which are our proprietary indicators here that give us the heads up the market's going to go down as well. All right, let's just talk about drawing it, because some people ask the same question, was where do you draw it from? So I get the tool, I click it and I drag it. I click on the high, the wick, not the body, the wick. I click it and I drag it down to the low of the swing, to the wick. And then it projects the sell zone for me automatically. And what it does so well is that people think the market's going to continue up. They're buyers, and suddenly they get spooked. They're on the wrong side and it starts to sell off, and it sells off quite fast, often. Let me show you the market called crude oil. We've had a huge move up on crude oil due to the fact a lot of issues in the Middle East. Okay, now if we draw, well, let's start again here. It goes up, okay, it has a push higher after a decent downtrend, and then it starts to retrace. It doesn't break the previous low. So in technical analysis, you would say that's a downtrend. It breaks the previous low, makes a lower low. But it doesn't. It stays in the buy zone. So if we take our fib from here to the high, it comes into the buy zone. It doesn't breach the low. And now I'm on the lookout for pro-trend system buyers, any way of getting into this market, and we go green and we push higher. So it's the start. It's often the start of a really big move, and this could really push oil higher. Okay, so be on the lookout. Why not be on the lookout? You can do this on a 5-minute chart, weekly time frame, monthly chart. In fact, let's look at some other markets than not the standard that most people look at. Let's look at maybe some individual stocks. Here's Coca-Cola stock on the daily chart. You can see it's been in a beautiful uptrend, and it has this pullback here, and then it goes into the sell zone. It hits the sell zone twice, in fact, and then sells off really hard. It can't get above the high. So you know where you're wrong in the trade. If it goes above the high, the previous swing higher, then the trade's not in the sell zone. Okay, so you know now that it's going to probably make a new high and end with a divergence. But if it starts to drop and starts to push lower, and your momentum indicators are signaling it's going to go down, that's the key. So you know that in the sell or buy zone, if we make a move from that area, then it could go on a big move. Now, natural gas. I posted natural gas a couple of months ago. Let's just delete the drawings here for you so you can actually see how I went through the process here. Now, natural gas had been on a big tear to the downside, and then suddenly for several months it pushed higher. And then it started to come back down. We got the trend predictor here, my momentum indicator, which you can use a momentum indicator as well down below. So we just go to get the fib. We take the fib from the swing low, take it to the high here. We're in the buy zone. Okay, look, on the monthly chart, go down to the daily and wait for your buy signal. We got that buy signal on the pro trend system, and the market exploded higher once and twice. All right. Now, as you look at natural gas here, there is no buy zone. It needs to pull back deep like this. This is the buy zone here. Look how profitable that trade was. We made a huge killing on this market, guys, and lots of students did. And I also shared this out on YouTube and my newsletter as well. This is coming to the end of this move. Okay, we want to be in it on the rotation here at the start. So if you're someone as a trader that isn't making big profits and you can't get into big trades, you need to look for the buy zones on those fib retracements. Here's another example of the dollar yen. had a huge downtrend. We pushed higher. We came down. We drew our fib retracement buy zone. It hit the buy zone. Trend predictor kicks in as well. And then it just flies higher for several hundred pips. This could continue to the upside as well. Let's go and have a little look at, I mean, we're shorting. So many of these sell zones have kicked in with the stocks in the FTSE 100, the builders. I mean, the house building market, we've seen so many of them go into the sell zones, and they're selling off very hard indeed. Let's have a little look at the Hitchcocks here. You can see it had a big drop, big move down. Okay, this whole push lower was very nice indeed, and then it started to gather some strength and push higher into the sell zone, which is the 76.4 and the 61.8. And then it has that deep retracement in there, and then it's getting absolutely caned to the downside, guys. This has sold off since then, the sell zone. You don't want to short it here. You're too late. You want to short it at the start of the big move. Look at this example of when it doesn't happen. So you can see that the markets have pushed. This is, by the way, Marriott International US stock. You can see as it starts to go back up into the sell zone, it just continues. And it literally breaks above this high just by a few points. If we take the fib retracement tool and take it from the high to the low, we get into the sell zone in here, but it actually doesn't fire any reds. We don't lose any momentum to the downside. So that is not an entry. You don't get your entry on that. That's fine. That's fine. We're going to find something else. This stock called Procter and Gamble Co. here was an absolute beaut. I just closed the trade off for a profit yesterday. You can see we've had a nice move higher, nice big bullish market, and then we had this steep down couple of days, and then we retraced. We tried to gather more buyers in the market. We were still long at that point, but then we drew the sell zone. Okay, it went into the sell zone, just popped out of it, and then came straight back into it, and then it started to turn red. And we went down to smaller time frames and shorted it. So this market sold off. This was $175 all the way down to $167. Absolutely beautiful market move. Here's the gold price. You can see the start of gold. Another example, we started from here up. Draw the fib retracement. Do we get in the buy zone? We certainly did, guys. We got in the buy zone, and this market flew higher from the lows. Draw it to the high swing. Stayed above the buy zone here. Literally fired green PTS. Did not break below the lows here at all. All right, so very nice move, and by the time it gets up to here, it's too late. You want to be buying it in the buy zone, or as it just comes out of the buy zone with the momentum. Here's one that hasn't triggered yet, but is just setting up. You can see here, let's just draw it for you. This is soybeans. If you're into your grains market, there's the beans market. It's just the price going up, guys. If you're a swing trader, you can take advantage of these as well. You can see that we've had a big downtrend in the grains market. We pushed lower and lower and lower, and then suddenly for several days we've pushed higher, and then we're starting to pull back a little bit. All right, so now I want to find the buy zone. I've already got an alarm stuck in here, and this will email me when it's in the buy zone as well. So I'm going to take the fib retracement from the low to the high. Okay, we got the buy zone just at 109, 108.8. So as we come into here, we've got the trend predictor as well. These excite me, these areas, because as it goes up, it comes here, and then it goes on the big move. All right, then it goes on the big move a lot of the time. So I want to be in the big move. I don't want to be buying it up here. My risk reward is fantastic. I can ride these waves, and I can be in these day trades and swing trades literally for weeks and months if I wanted to, depending on the time frame. But what about if you're a day trader here? Let's go and have a little look at the German DAX. Let's switch that to the 5-minute chart. And how could you use the buy and sell zones here? Well, we did today. You can see here that the price makes a move up. Yes, it goes up for 5, 10, 15, 20, 25 minutes. Then it retraces for 10 minutes. Draw your zone. Draw your buy zone. You take it from the low to the high. It does not break the low. It stays within the buy zone. Then you buy it. Okay? And then you buy it as it comes out of there, and away we go. Look at where we're trading now. There's loads of them. You'll see loads of buy zones on a chart once you identify them, guys. It is a wonderful way of trading, and I use it all the time, and it's something that gets me bigger profits. Look, if you like the video, it's gone on for 15 minutes, longer than I expected. But if it helps you, give me a thumbs up, and also subscribe to the channel as well, guys. Look out, practice the buy zone, and you'll see price reverse from those areas so often that gets you into big profitable trades early. All right, hope it helps. Speak to you.